If you're watching this video, I'm going to assume that you're probably bullish on NIO. I'm also going to assume that you're either holding some shares or you're perhaps looking into taking or opening a new position. As far as being bullish, that makes two of us. I'm very bullish on NIO. I'm holding a very large position in NIO. It's one of the largest positions in my portfolio, and I plan on adding a lot more NIO to my portfolio. But the fact of the matter is that I'm not willing to just pay any price. That being said, you're going to need a price target. You're going to need to know about what NIO is valued at so you can know about how much you should be paying for shares. And in this video, you're going to not only get a price target, you're going to get the most up-to-date and accurate price target. You're also going to get the latest NIO news and updates. And we're going to talk about something that I'm seeing out there that you need to watch out for. So stick around because we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If you're new here and you want to learn how to use stocks and options to make your portfolio go parabolic, make sure you start now by subscribing and tapping that bell so you never miss an upload. Welcome back, ladies and gentlemen. So we've got a lot to talk about today, but before we do, go ahead and smash that like button because it really helps out this channel and I need your help. But without any further ado, let's talk about NIO. So the market's been extremely volatile lately. Over the last week or two, we've seen a lot of movement in price, to say the least. So you could have gotten NIO possibly in the low $30 range. Congratulations to those of you that did. I know I did. And NIO seems to be rewarding us pretty well right now. But I want to talk a little bit about recent events. So we got some analyst news to talk about on Wednesday. A Mizuho analyst, Vijay Rakesh, initiated coverage of NIO with a buy rating and a price target of $60. So the reason behind his price target and the buy rating, according to him, is because NIO is a leader in innovation and in the upscale EV segment in China, which in turn is the largest global market for all EVs. Now it seems that one of the factors that makes him so bullish on NIO has to do with the BaaS, or battery as a service, which enables NIO to bring their upscale offerings to the market at a much lower upfront cost than their rivals, and this analyst sees this as a key differentiator for NIO. Rakesh also believes that there is a significant upside ahead for NIO, as the company is expected to start selling in Europe in the second half of 2021. Now, we are going to look at some opposing views or opposing arguments on this and discuss those in just a moment. But first, let me continue on with the positive news. So there was another, well, I'm not going to call it a rumor, but it kind of actually is a rumor to some extent. But another reason that shares drove higher last week is anticipation of a deal with Sinopec. And for anyone not familiar with Sinopec, it's the largest network of gas stations in China. And so where exactly is this rumor or the speculation on this Sinopec deal coming from? Well, several Chinese media reports have been saying that NIO may strike a strategic partnership with Sinopec, and if this turns out to be more than a rumor, you can expect that NIO shares are going to skyrocket. Essentially, this would put NIO's battery swap stations across the entire Sinopec network of stations, but the problem is that this is just all a rumor or speculation. The simple fact of the matter is this: NIO is expected to launch one charging station on April 15th at a Sinopec location. But, like I said, it's just one. It's not over the entire network. They have not secured this deal yet. Sinopec has not agreed to this partnership with NIO. So until that happens, this is all speculation. And I'm sure that some of this, or some of these expectations, are already priced into the shares. So this is where you need to be careful and watch out, because NIO could be slightly overvalued, but we're going to talk about that a little bit later on in this video. But what I'm going to do now is offer you some of my very own speculation, so keep that in mind. This is just my speculation based on my own opinion. Do your own DD. For me, I think it's pretty obvious that I don't see Sinopec, a huge company like this, just jumping all in blindly and making changes to its entire network of gas stations, okay? These are big, expensive changes to make, and I have reason to believe that there are several reasons that they wouldn't jump or go all in on these changes at one time. First of all, they're going to want to know, or they're going to want to see some type of data. They're going to want to understand what kind of numbers or what kind of return this is going to produce for them. This is a big company that's got an entire network of gas stations. They're a successful company, and they're successful for a reason. They're successful because they're probably careful, realistic, and essentially not dumb. They're not making dumb decisions, jumping in on things without understanding the risk and the reward. So they're going to want to start off slow and manage their risk. They're going to start slow and see what kind of return on investment they're going to get off of this. They are going to want to see if NIO becomes the clear winner, which right now it appears that NIO will be the clear winner in this EV race. But, you know, it's still speculation. These big companies like this one that have survived for this long and have the type of network that they have, they've done this by managing risk. Now, I do understand that they're going to want to invest into the future, and all companies want to do that because that's another way you survive. You know, if you don't get into the next best thing, then the world kind of leaves you behind when everything I guess updates, or what's the word I'm looking for, evolves. You know, you want to evolve with the technology, you want to evolve with the world, and that's understandable, but they still calculate risk. They still need to manage those risks. So that's why I'm saying they're not going to go all in and just make this agreement with NIO. If they do, there's going to be contingencies. We're really just going to have to see how it plays out. Now, I'm assuming that based on the numbers and the data that they get from this first one, they're going to start slowly popping them out in other locations. And I'm sure that they understand the irreversible trend of going to EV. I know that there's legislation, you know, in China and pretty much everywhere else taking place right now that's kind of pushing that move. But, you know, it's still far away enough to where they don't need to do anything too extreme this early on in the game. Now, they do want to start pretty much easing on in there. You know, they don't want to be left behind and pretty much evolve with the world. And I understand that, but they're not going to just jump all in this early and be in this early or being too big too early or too big too soon can hurt. And I've got evidence of that. And I've got evidence of that when it comes to basically battery as a service swapping stations. So let me tell you about that very quickly. As I'm sure most of you know, or at least I hope that you know, especially if you're holding NIO, but the concept of BaaS, or battery as a service, is not a new one. We've seen that Tesla tried it back in 2013, and they decided that it wasn't practical for them, so they kind of dumped or abandoned the entire idea. But also, there's other companies. There's one specifically, it was a startup out of Israel that raised nearly $1 billion and pretty much set up a small network of these stations back in 2012, only to file bankruptcy by 2013. Now, this did take place in Israel, and the name of the company is Better Place. So if anybody wants to look into it, Google it, do some research to have a better understanding of how that happened, or just to make sure that I'm telling you the truth, you know, be my guest. But I'm telling you this because looking back at it, you know, in retrospect, we know that this company was entirely too early, okay? The demand wasn't great enough at that time for them to really make enough revenue off of that idea. We see that this is getting to be more accepted, and there's legislation that's pushing it onto us now, but is this going to be sustainable for Sinopec to put these BaaS stations out there? Because we have to think of some other factors that might affect this. Number one, who uses the BaaS stations? Only NIO people would be using those. So is there enough, or is there going to be enough in the future, enough demand? Is there going to be enough NIO customers to justify Sinopec to modify the infrastructure of every single station in their network to pretty much accommodate NIO? Now, this is a short-term issue, or more of a short-term issue than long-term, because we're going to have to assume that demand for electric vehicles and NIO will increase in the future. But what if NIO isn't one of the winners of this EV movement. What if something happens? And I know a lot of you right now are probably thinking that that's not very likely, but what if? There are no guarantees in life. So as investors, we got to ask ourselves these types of questions. And I really just wanted to point out that there's a lot of hype, especially on YouTube. You see videos with thumbnails that are talking about huge deal for NIO. NIO signs a huge deal. NIO going to 300. Some of them are talking about the Sinopec deal and acting like NIO's already secured it, which is not the case. These are all just rumors and speculation. And these videos contribute to investors, new investors probably, putting money in NIO, which means that this type of news is priced in already, like I said at the beginning of the video, or at least somewhat priced in. Now, if this news were to get confirmed, then yeah, that's a whole nother story and you'll see a much bigger run up. But what's priced in right now, in my opinion, could really hurt you if something negative comes out about this, or it turns out, or once it turns out that this is all speculation. Keep that in mind. Don't just jump in on any stock based on stuff you've heard in a video or stuff you're seeing on the internet. You have to actually do some thinking and do your own research, or you're going to get burned and it's going to hurt. But lucky for you, I know just how to help you guys. So I'm about to play you a clip of my buddy Chris, of one of his videos that he just put out. It's of course about NIO. I'm going to give you a little preview of it, maybe a little more than just a preview, because I want you guys to see the type of quality information that he puts out. He is a newer YouTuber, but he works very hard. He's a fundamental guy. I mean, he's got a degree in this. I mean, this is what he does for a living, or used to do for a living. And he can break it down for you and let you know exactly how much of the NIO share price is intrinsic and how much of it is extrinsic, so you know at all times what you should be paying for NIO. And for anyone that's interested, you can check my description below to get a link to his channel so you guys can sub there as well. He's got great content coming out all the time. But let's go ahead and roll the clip.
Take a look at the NIO JAC partnership, what these guys going on, what they're up to, and what this means for NIO. It's been in the news lately. A lot of analysts have been covering it. A lot of people have been hearing different things in the background. So what I want to do is take a look at these guys. I've done a little research on them and see what they're all about. JAC motor brand has been around for a while, almost 50 years now. They do manufacture vehicles independently of NIO, but they do have some partnerships with NIO. They are publicly traded. And this JAC motor company's name is actually an acronym. I won't even try to go there on how to say it. We'll just call them Automobile Company J for now. But if you can't pronounce it, good luck to you. I won't try it here. So, JAC, the early years. Founded in 1964, actually under JAF. They were a factory up until 1997 when they changed the name to company. They started producing passenger vehicles in 2007. Around 2009, the Chinese government really looked around and said, hey, you guys, no, we have too many car manufacturers here. We really kind of want you guys to look around and see if you can't merge and consolidate some of this. So JAC wanted no parts of that, so they really wanted and really tried to stay independent through all this. So in 2010, they started to produce electric vehicles. 2012, their sales delivery of vehicles reached 445,000 vehicles, while capacity rose to 500,000. It's kind of what they could produce. They've entered into contracts in 2016 with DR Automobiles out of Italy, and also in 2017, a joint venture with VW in China to produce electric vehicles, where they remained, Volkswagen rather remains 50% of the parent company. The current relationships, what they have going on as it pertains to NIO. NIO signed an agreement with these guys. They currently under a 5-year agreement to produce ES8s, EC6s, and ES6s. The way NIO has this worked into a deal with JAC is every month they pay them a fixed amount per vehicle delivered, and this kind of helps NIO to control cost and kind of match demand with cost as they move forward. I'll get into it a little bit later about how this is a safer avenue for a startup with no brand awareness yet. They don't have any kind of way to know if it's going to be profitable or not. So what you want to do is kind of keep those fixed costs low, keep the capital expenditures low early on before you can wait and see if you got a market for your product. So once they figured out if they had a market for the product, they were able to go ahead and invest. Now, NIO is coming in with this company as a collaboration, but JAC also still manufactures their own vehicles. So what NIO would have to do to make this work would be to add on to the existing building. So what NIO did was put 49% of the cost they absorb. JAC says, hey, you guys will one day get on your feet, so we'll pay half, because once NIO gets this ball rolling, they will eventually move out of JAC's factory and into their own, where JAC will still have access and control of this extension that was constructed onto their building. So NIO is going in. They are with, right in there with them. They're taking more of a management position of the expansionary of it as it pertains to NIO products. They want to get up to about 120,000 vehicles annually through 3 shifts. So this is kind of what's pushing this expansion. One thing we got to remember is that NIO actually doesn't, at the time, own a license to manufacture cars in China. So NIO didn't want to go this route. They started, they stopped, things started, not looking so well for these guys. They said, hey, let's just do a joint venture. Get in here for 5 years, see how things go. If we're profitable, we'll move into our own plant. If we're not, we'll just fold tent and kind of bow out. Now, one end game here is what a lot of analysts and people like me think, is that they want to expand here, not for the main product line, but also to get into mass marketing, where they are, producing cheaper vehicles, not under the NIO brand. NIO will remain a premium brand and compete against Mercedes, BMW, and Audi. That's to quote the CEO of the company. He will not let NIO be diluted, that brand, but he will. He is on board with mass producing other vehicles under similar brands. So once they do expand, they do get the volume up, they are producing, this will start to look good to the Chinese government and allow them to start to pursue their very own business license, so that in the future, when it is time to expand, they have their feet wet, they've been in the game, they have a product, brand recognition, a foothold, some infrastructure going, and they're ready to get out there on their own and grow and expand. And this will kind of position them to where the government say, hey, you guys, here is a license, you know what you're doing, go get it. That's kind of the history, a little bit of the background on JAC. So when you see the merger and everything's, coming together, it won't blindside you. It's a lot of information. If you want to dig further, it's a lot of information in the 20F forms on their, government release documents. So you can go and when you get time, you can, read more in depth about the relationship that these guys have. I think it's positive. It's working out for both parties. I read an article where these shares rose through the roof. Announcement of the NIO expansion agreement. I always want to leave you guys with my new price target. Actually, it's not new. As you can see, a lot of you guys have seen this before. I still remain at 55.38. I feel comfortable buying all the way up to 55.38, and it will, unless something happens that'll move my models I'll stay right there. I feel comfortable right there. We can look at some deliveries in Q1, some in Q2. I can make some adjustments from there.
All right, so that was Chris from Spot On Analysis. Let me know what you guys think of his video. Let me know what you guys thought of his analysis. And also, make sure you sub to him. You can find a link to his channel in my description below. And of course, don't forget to like this video, smash that like button, rub it, touch it, do whatever you gotta do. Just make sure that you like the video because it really helps me out. If you haven't subbed here yet, what in the heck are you waiting on? I've got quality content coming your way every single day for you to take advantage of. I do the DD so that you don't have to. Don't wait any longer. Go ahead and sub, smash that like button, and stay tuned for the end screen so you can find another video that you're gonna love. While I have you here, I wanted to quickly tell you about the brand new First Trade app, available for mobile or PC. The platform will give you access to powerful and easy to use tools and allows you to trade with less restrictions, zero commissions, zero fees, and you can use the first link in the description below to download a free stock today without having to deposit any money. This will greatly help out the channel and is always appreciated. And now back to your regularly scheduled programming. Congrats, ladies and gentlemen, you've made it to the end of the video. If you like what you watched, make sure you subscribe because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now, or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.